Welcome back to the Dividend Diplomats YouTube channel. Guys, bringing the heat. You got Bert, the rocker over there. You got Lanny throwing down bombs right here. Oh, man, throwing up the deuces. Is that a Guardian shirt, by the way, you're wearing?
No, it's an Indians one. So the Indians quarters,
Nice.
but it's Nike, so I'm not getting rid of it. I don't care if they change their
Is
name.
that T-shirt even Indians, though, as well?
Oh, that's just the Cleveland shirt. Yeah, you got to match. Let them know.
Bird's rocking the
Like,
Guardians. What a great weekend.
cool.
Obviously, we don't even know
Yeah.
yet what happened in the first game of the semifinals here in the Eastern Conference for NBA. We're filming this here on Sunday night, May 5th, and Cavs just beat, the Orlando Magic to get to we beat game seven. Let's go. Guardians pulled out a couple back-to-back wins here as well.
Yeah, I was at one of
Cleveland,
them.
make some noise.
Make some noise, that's right. And make some noise on our channel by subscribing. Give this video a thumbs up. Help us reach the next milestone of subscribers. We appreciate it. We're always talking about undervalued dividend stocks, and we're always following the news, trying to bring you our thoughts, what we're doing, what we're buying, what we're selling, all the good stuff that's going on in the market. So if there's a certain stock you want us to look at, let us know. Post it down there in the comment section too. We'll see if we can add it to the list or do a short about it.
We'll see. We'll see if we can add it to the list. No, I'm just
Yeah.
just kidding, guys.
Yeah. So who are we talking about here today? We're
Yeah, and
talking
also,
about a company that's just been whoo, demolished, Lanny. This was not a very good week for this stock, was it?
no, I mean the stock's similar, and we're not talking about Starbucks. That was last week's video. But take a look at that.
Gotcha.
But this stock also on May 1st, also in addition to that, in addition to the Leggett and Platt dividend cut, check that video out as well that we released on Saturday. We had a bang bang video Saturday, Sunday. Well, we figured let's make this a trifecta loser video here, guys. Um, Another stock that dropped about, I don't know, 17 to 18% in a day as well. One that holds, quite a bit of weight in the marketplace, the market cap of over now 70 billion, but was much higher than that prior to the drop. CVS Health, ticker symbol CVS, keeping it simple. The Medicare, really impacted CVS this quarter, and they had a dismal, earnings released. Granted, revenue was up, which is amazing when you actually say revenue was up to 88 billion for the quarter.
Shows you just how large of a company CVS is. Every time I see the sheer volume, the sheer number, it impresses me every time.
So but they way missed earnings.
Very much.
EPS of only 88 cents for the quarter. Um, the biggest thing that the reaction came from, Bert and the community out there was with CVS in their earnings release. You know, Last quarter they set usually, hey, this is what we are going to expect, whether it's for the year or for the
Mm.
quarter. Well, they were expecting at one point for the year about $7 in EPS. So $7 is one thing if you adjust it down to like 706, maybe we'll do like 685 or but no, Bert, what did they adjust their forward EPS down to on a year-to-date basis?
So it went from $7.06 to $5.64. That's nearly a $1.50 swing. You're absolutely right. It's not the miss that caused the massive drop. Misses happen all the time, and guidance gets lowered. That
Yeah,
happens too. It's just when you drop it nearly a buck 50, that's going to cause you some problems.
yeah, a 20% drop caused a 20% drop in stock price when you think about it.
Yeah. But I mean, we get it though. If there's pressures on Medicare, think of how many prescriptions, how much revenue for all of these pharmaceutical companies come from Medicare. So, of course, a major shakeup there is going to obviously trickle through to your guidance. So, it makes sense. It's just unfortunate for CVS shareholders.
So if you've been holding CVS like I have, which I now own 98 shares, because I did buy a share when it dropped into the 55 range, on May 1st, whatever.
Yeah.
I'm at 98 shares. I'm holding the bag on CVS right now because I felt like they were much more diversified than Walgreens Boots Alliance, WBA, the other piece of crap dividend stock that both Bert and I own.
Yeah.
Um, but the CVS is way more diversified.
Yes, agree. And they still have 80 billion in revenue. So even though there's a pullback, they're still making money. They still have cash flow. The question is though, how are they looking in our metrics? Because that's the ultimate decider here, right, Lanny? Are we going to be buying them now? Let's run them through our screener, which focuses on that PE ratio, payout ratio, history of increasing dividends, and that bonus metric, that dividend yield.
Those are the metrics, guys, and we're going to look to see if CVS is a stock to buy right now. Is it time for you to buy CVS stock? Again, not professional advice, but we're going to run through the stats here. The first metric, that price to earnings ratio showing undervaluation. Trading at $55.90 here at the time of this video, again, May 5th on a Sunday. We're going to use the projected EPS for management. We're going to use $5.64. That's a PE just about right under 10 times earnings.
More than less than half the S&P 500, so it passes that one. Obviously, even with the big earnings cut, it still has a 10 PE ratio. Payout ratio is their dividends $2.66. That gives you a still perfect payout ratio, 47%. Again, this already factors in the reduction in guidance that we're talking through. So even with that cut, the payout ratio is still perfect.
The funny part about CBS too is what they did, also towards the end of last year, which was another 10% dividend increase. So sliding into that dividend growth streak, they're now back to about 3+ years. They had a pause to increases during the Aetna acquisition, but they've come back in full force doing 10% bangers, pardon my language, but 10% bangers for 3 straight years, including this last fourth quarter of 2023. So though it's skewed, the 5-year growth rate's only 5% because of 0% for 2 years.
Yeah. So their price is down 29% year to date. So you know what's going to happen when the price drops? Yield shoots up. And boy, oh boy, did this yield shoot up. Their dividend yield is now 4.76%. That's nearly 1.57% above its 5-year average dividend yield of 3.19%. That would kind of said it all, Annie.
Yeah. I mean, the metrics right now on paper, again, are are really good. Um, when you look at the company and the business right now, down 30% though this year.
Mhm.
I think this is a risky bet. It's a risky stock right now, just with the volatility with what's going on in the health care side of things. Especially with what did happen to Walgreens. Granted, again, two different companies, two different business models.
Yeah, but same idea though. And what's been one of the lessons, at least I know I've learned here from Leggett and Platt. Yes, there are a lot of risks here, especially to your point, Lanny, with some of the news, what's going on with Medicare. But this time I take my eyes to the payout ratio here. And even with the cut, they still have a 47% payout ratio. So they've been conservative with their dividend. The increases, sure, it was 10%, but they haven't been the huge dividend increases. What separates them from Walgreens, who cut their dividend at the beginning of the year, was Walgreens' payout ratio at the time of the dividend cut was significantly higher than where CVS is right now. So you keep an eye on it and you see what's going to happen with the payout ratio. If the payout ratio starts creeping up and things don't get better, then you might have an even bigger problem on your hands with CVS.
Yeah, currently, and I mean, I agree. I agree.
Yeah,
Gotta monitor CVS stock. Because I already own 98, I'm not going to add any more because the next drip will get me to the 100.
that's fair. That was going to be my question. So you already have your path to 100, so you can start writing options. You don't need to put new capital and you're going to do it there. Everyone, let us know what you, and you think about CVS right there. Are you buying? Are you waiting? Are you watching? Are you trying to see let things play out a little bit more here in the sector? Let us know in that comment section below.
Guys, if you haven't, definitely like this video. Subscribe to this channel, guys. Keep saving, keep investing, keep building that dividend stock portfolio. And Bert, what else?
Hmm.
Let
You're
them
either
know.
with us or you're against us, Jack.
That was Bert the Hurt and Lanny from the Dividend Diplomats. Over and out.